kicker for me is that I do think we have an inversion coming where all of a sudden Bitcoin starts to take on more of a safety asset. So as you slip into recession, stocks by default will have less consumers buying their product and their earnings are going to continue to drop. Now, fund managers are going to have to say, listen, I have to stay invested. So where do I go? Well, right now, they're not going near crypto. FTX screwed any chance of that, frankly, in the near term. But if you can get regulation in the first half of 2023, and I do think it will come in the first half of 2023, now there's transparency, there's forced transparency. Now you'll start to see institutions saying, okay, listen, earnings continue to decline, so stocks have to go down. Where am I going to put my money? Let's look at gold. Let's look at Bitcoin. And in fact, we're seeing an amazing rally on gold today, although it is off of its highs, but you're seeing some of these same things already starting to kind of coordinate. So I think that May to June is probably your low in Bitcoin. That's what I'm pricing out. And then I think it starts to slowly take on a kind of a hedge against global fear and panic and recession.
Bitcoin is now further below a key moving average than it was at the pit of the March 2020 COVID-19 crash. In a tweet on January 4th, popular trader and analyst Rekt Capital revealed just how remarkable the current Bitcoin bear market really is. Not only has Bitcoin now spent more time below its 200-week moving average than ever before, it is now further beneath it than any time in history. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing Gareth Soloway updates about Bitcoin's current market standing, the prospects of a final bottom in crypto, and the bear market strategies that should be adopted by novice investors in these times.
The mental factor of Bitcoin was it started in 2009, which was when the Fed started quantitative easing. And so we're in this period now of where you don't have quantitative easing, which has been arguably one of the biggest factors in the bull run in Bitcoin, right? It means the reason why Bitcoin came into existence to offset the printing of money. Now, I do think that eventually it does kind of go in that vicinity, but I think at this stage, the question is, does that 4-year cycle become elongated in the near term because you don't have the printing of money? And I kind of do think it will. I honestly think that this bear market, it won't be a ton longer, but I think it stretches closer to the next halving in Bitcoin than it normally does.
Bitcoin has underperformed both stocks and gold since the FTX meltdown, Cointelegraph reported, leaving the door open for what optimists hope will be a game of catch-up. Late last month, David Marcus, CEO and founder of Bitcoin firm Lightspark, predicted that the crypto winter would outlast 2023 and even extend past Bitcoin's next block subsidy halving event, expected around April 2024.
Yeah, so I think the first thing we have to recognize is that this will be the year, and probably in the first quarter, where the Fed stops raising rates. No one should expect them to cut rates. They're going to be very, very hesitant to do so because inflation is still well above that 2% level. But at least the markets will get jittery and excited for that aspect. And I think that'll be a short-term catalyst if we get that word from the Fed that they're finally done raising. The next thing that I think is going to be a tremendous kind of shock to the market is that we are going to slip into a recession in 2023, and it's going to actually turn out to be a very rough recession. Right? We obviously know that past recessions since 2009, the Fed has come out, printed money. They can't do it this year. So there's going to be a point later this year, probably in the third quarter or fourth quarter, where the market and investors are going to say, uh-oh, if the Fed won't save us, how do we get out of this recession? We don't know how. We don't know. We're like it's like the parent and the child. The parent always saves the kids. When the parent leaves, what happens to the market here? So I think that's going to be key. I think this is the year where the S&P actually dips and takes out, not only hits the pre-COVID high, but actually retraces to a key trend line. I'm going to show my chart right here because I think it's really worth taking a look. So this is my S&P 500 chart. Today, we are seeing a nice little down day. There is a bearish pattern formation here, so that does dictate further downside over the next week or two. But really what I'm expecting is a move probably within the January or February month to 3,400 on the S&P. And then obviously after that gets a bounce, you'll be looking at this long-term trend line. Take a look at this trend line. It goes all the way back to 2009. connects through these lows. Here was your COVID pierce. That just panic was just insane there. But this is probably where we're headed. So we're looking at a 3,000, at least I'm looking at a $3,000 target on the S&P 500 this year alone in 2023. And then let's not forget about crypto. I mean, crypto probably bottoms this year, but it's going to be a very volatile yield. You're going to have some pops in crypto. You're going to have some dips. You will probably hear about regulation in 2023 as well. And I think that's going to really send the market into kind of a tizzy in the near term. There's two things that could trigger the Fed to start printing or lowering rates. One would be, needless to say, some sort of massive recession or depression, or it could just be the fact that inflation gets down to 2%. And right now, the Fed is like, oh, it's got to go to 2%. But that's a moving target. Let's be fair. Like if we got in a Great Depression like type scenario, they're not going to be like, oh, we're at 2.1%. We can't cut rates. I mean, or print money. They're going to do it when you have unemployment skyrocketing. So I think the key is, though, investors need to understand it's going to have to be a shock to the economy to get them off of the bench, essentially. And that's not going to happen in the first year. It's not going to happen in 2022. There's a chance if things get worse, or excuse me, in 2023, there's a chance it could happen in 2024. But I honestly am in the camp that I don't think we see new all-time highs in the S&P for 10 to 15 years, actually, from here.
Interesting. Okay.
Yeah.
Data published by the Institute for Supply Management on January 4th, which showed slower demand and lower input prices for manufacturers, gave investors positive expectations that the Federal Reserve may reduce future interest rate hikes and a cooling U.S. dollar. Generally, the crypto market is still significantly down from its all-time highs, but Ether's price reacted positively by rallying to a 3-week high at $1,253 on January 4th. Despite the gains, many traders are still nervous over the Grayscale Ether Trust potentially converting to a Reg M, which would allow spot price withdrawals and its possible impact on the market. With Bitcoin's record low volatility, some analysts believe that price whipsaws are on the verge of returning, but in the meantime, the BTC's range-bound price action could be providing a boost for altcoins.
Yeah, I think Q1 is when they'll do their last rate hike. I don't know if they're going to do another 25 and then be done, or another couple 25s. But I do think that the economy significantly weakens in 2023. We're seeing the loan default spike. I mean, the signals are there that it's coming. It's almost like you see that tidal wave out in the ocean and you're like, holy crap, but you still have a little time before it hits you. But then it's going to get close here in 2023 and actually hit land. And I also think it's important to recognize that investors, like you said, most retail investors came in around COVID, right? There was that big asset run. The Fed was printing the money. They finally got lured back in the market. And so they haven't experienced a long bear market like we saw from the tech.com bubble, right? And the tech.com bubble collapsed. We saw 15 years before the NASDAQ made a new high. And the only reason I'm saying that could be the reality of the situation is because you're losing the main driving force for the longest bull market that we've ever had in history, which was printing money. And so you have to say, unless they're going to somehow start printing money again, it's probably going to be a long time before we see new all-time highs. In my portfolio, what I'm really looking to do here is pick up some of these like EWZs on China. China has ripped recently, so there's no way I'm going back into that in the near term. But when it does pull back, I will be a buyer of pullbacks there. And then also gold miners, I think, do very, very well in 2023. So those are some other areas. And then there will be a point where I do think, things with exposure to cryptocurrencies start to become better. Coinbase has been absolutely trounced. It's actually starting to look semi-interesting down here, even though I don't think Bitcoin's quite bottomed. But there are some things where you can, for me, I start nibbling, right? I'm a nibbler. I don't go all in at one time. I kind of dollar cost average slowly on very, very good levels.
Overall, crypto markets are likely to continue seeing price whipsaws, and most analysts agree that there are plenty of volatile days ahead. While the positive news of easing inflation ahead of the FOMC meeting minutes is providing a nice short-term bump in crypto prices, the market's reaction to the upcoming non-farm payrolls and underemployment data, plus the CPI report, will be the true determinant of which direction the market chooses to take.
Admit they've made an error, but anytime you have your money and you're making a decision to buy or sell a stock or a crypto, the onus is on that individual. When I screw up, and I have plenty of screw ups trading, right? It's not like I'm not going to be like, oh, my cat walked across my screen and messed me up. It's like, dude, I made that physical choice to click the button, and I got to live by it. So I think that's true, but in knowing how the world works, that's somewhat of the harder thing to come by. There are some investors that actually own up, absolutely, but there are others that it's much easier to blame someone else. Jay is like there's nothing wrong with taking a risk. I was talking in a few recent interviews about like Solana. Solana was trading at $8, and I got on interviews and I was like, listen, Solana, it could go to zero. But if it survives this fear from FTX and what they're going to unload, it could also go back to 50. So, if you're going to buy Solana, number one, you do with a very small amount of money. And number two, you have to go in saying, listen, my down case is an $8 or $9 loss, but my upside is $50 or $100. And you have to be okay getting into those trades. So I think, it's all about risk reward analysis.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.